Based on the historical data and forecast, Bitcoin has shown volatility with an overall upward trend, bouncing between support and resistance levels. The RSI indicates periods of oversold and overbought conditions, while the Bollinger Bands suggest potential price fluctuations. Considering these factors, I propose a multifaceted investment strategy combining RSI, Bollinger Bands, and support/resistance levels to maximize returns. First, we will implement a strategy based on RSI. When the RSI falls below 30, indicating an oversold condition, we will enter a long position at $110,100. The stop loss will be set at $108,500 to protect against unexpected declines, and the target price will be $118,900. Second, we will use the Bollinger Bands to predict price movements. When the price touches the lower band, we will enter a long position at $108,800, with a stop loss at $108,500 and a target price at $122,100. Finally, we will leverage the support and resistance levels. We will enter a long position at the support price of $114,200, with a stop loss at $112,600 and a target price at the resistance price of $117,100. Combining these three strategies, the most efficient portfolio will prioritize the RSI strategy, with a 60% allocation, the Bollinger Band strategy with a 30% allocation, and the support and resistance strategy with a 10% allocation. This approach balances risk and reward, aiming for high returns while mitigating potential losses. Based on the historical data and forecast, Ethereum has shown considerable volatility, with a recent sharp decline from $4,520 to $3,860, followed by a recovery to $4,140. The RSI values indicate periods of oversold and overbought conditions, fluctuating between 33.5 and 63.8. The Bollinger Bands have widened, suggesting increased market uncertainty. The forecast for the next week predicts a continued downward trend, with prices potentially reaching $3,800 to $3,850. Considering these factors, I recommend a short selling strategy targeting a potential price decrease. Specifically, I suggest entering a short position at $4,140. The stop loss should be set at $4,160 to protect against a potential price reversal. The initial target price is $3,880, coinciding with the support level. If the price breaks through the support level, the target price can be adjusted to $3,800. This strategy combines technical indicators like RSI and Bollinger Bands with support and resistance levels to maximize potential returns while managing risk. The RSI is currently at 46.2, suggesting a slight overbought condition, which supports the short selling approach. The price is near the upper band of the Bollinger Bands, indicating a potential for a downward correction. This approach aims to capitalize on the predicted downward trend and the current market conditions. Based on the historical data and forecast, BNB demonstrates a strong upward trend, consistently testing and breaking through the 1300 resistance level. The RSI fluctuates but generally remains above 50, indicating bullish momentum. The Bollinger Bands show that the price has been trending above the middle band, further confirming an upward trajectory. Considering these factors, I recommend a long position strategy. We will initiate a long position at $1,240, coinciding with the first forecast price. To mitigate potential risks, we will set a stop-loss order at $1,220, just below the established support level. For the target price, we will aim for $1,280, aligning with the forecast price for the end of the week, offering a conservative yet achievable profit. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we will consider an additional entry point at that price, with the same stop-loss and target price. Conversely, if the price touches the lower Bollinger Band, it could also signal a potential entry point. However, given the prevailing upward trend, the primary strategy remains the long position at $1,240 with a stop-loss at $1,220 and a target price of $1,280. This portfolio prioritizes capitalizing on the established trend while incorporating risk management techniques to protect capital. Based on the historical data and forecast, XRP shows a downtrend, particularly noticeable in the last week of the forecast period. The RSI consistently dips below 50, reaching an oversold level of 26.2 on October 12, 2025, suggesting a potential shorting opportunity. The Bollinger Bands also indicate a contraction, hinting at a possible breakout. Combining these indicators, I propose a short position with an entry price of $2.56 on October 13, 2025. A stop loss should be placed slightly above the upper Bollinger Band at $2.65 to protect against a potential rebound. The initial target price is set at $2.23, aligning with the forecast price for October 16, 2025. To refine this strategy, we will incorporate a trailing stop loss based on the lower Bollinger Band. If the price rises to $2.65, the stop loss will adjust to $2.60. The second target price will be $2.22, corresponding to the forecast price on October 19, 2025. This approach aims to capitalize on the predicted downtrend while mitigating risk and securing profits. The support price of $2.38 will serve as a secondary reference point, and if the price breaks below this level, a further reduction in the position size or complete closure of the trade may be considered. Based on the historical data and forecast, Solana exhibits a downtrend, particularly evident in the recent price action and the projected decline over the next week. The RSI has been fluctuating, with a dip below 33 on October 12, indicating an oversold condition. Considering this, I recommend a contrarian strategy focusing on short-term gains. Our entry price will be $193, coinciding with the support level and the oversold RSI. A stop loss should be placed at $172 to mitigate potential losses if the downtrend continues. The initial target price is $221, aiming to capitalize on a potential bounce from the oversold condition and a move towards the recent resistance. To refine this strategy, we incorporate the Bollinger Bands. The price consistently trading near the lower bands suggests a potential for a rebound. Therefore, we'll implement a secondary strategy. If the price reaches $193, we'll enter a long position with a stop loss at $172 and a target price of $221. If the price breaks below $172, we will exit the position. This combined approach leverages both RSI and Bollinger Bands to optimize risk-reward ratios and enhance the probability of achieving high returns. The final portfolio will be 70% of the RSI strategy and 30% of the Bollinger Band strategy. Based on the historical data and forecast, Dogecoin shows a downtrend with increased volatility. The RSI consistently dips below 50, indicating weakening momentum, and the recent plunge to 33.7 and 31.5 confirms oversold conditions. The forecast predicts a continued decline, with prices dropping to $0.18. The support price of $0.185 acts as a critical level. The Bollinger Bands show increasing width, signaling higher volatility and potential price swings. Considering these factors, I recommend a short-term short position with a focus on capitalizing on the anticipated downward trend. The entry price for this strategy should be $0.208, coinciding with the initial forecast price and a relatively oversold RSI. A stop loss should be set at $0.219, just above the forecast price and the recent high, to limit potential losses if the price unexpectedly rebounds. The target price is set at $0.18, aligning with the forecast and the support price. This strategy combines RSI, Bollinger Bands, and forecast data to maximize potential returns while managing risk. This portfolio will be 60% short Dogecoin, 20% in stable coins, and 20% in other altcoins. Based on the historical data and forecast, TRON shows a slight downward trend with price fluctuations. The support price is consistently at $0.314, and the resistance is at $0.34. The RSI indicates oversold conditions on October 12, 2025, at 32.2, suggesting a potential bounce. The Bollinger Bands show that the price is currently near the lower band, indicating a possible rebound. Therefore, I recommend a long position with an entry price of $0.322. The stop loss should be set just below the support level at $0.312 to protect against further downside risk. The initial target price is set at the resistance level of $0.34, offering a reasonable profit margin. To refine the strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, it's an oversold signal, and when it rises above 70, it's an overbought signal. The Bollinger Band strategy involves buying when the price touches the lower band and selling when it touches the upper band. Combining these, I suggest a long position with an entry price of $0.322. The stop loss is set at $0.312, and the first target price is $0.335, aligning with the upper Bollinger Band. If the price reaches $0.335 and the RSI is below 70, consider moving the stop loss to break even and setting a second target price at $0.34, the resistance level. This blended strategy leverages multiple indicators for improved risk management and potential profit maximization. Based on the historical data and forecast, Cardano is exhibiting a downtrend. The recent price action shows a significant drop from $0.873 to $0.646, indicating strong selling pressure. The forecast for the next week predicts further decline, with prices potentially reaching $0.603. The RSI is currently in the oversold territory, hovering around 38.1, suggesting a potential short-term bounce. However, given the overall trend and forecast, a contrarian strategy focusing on short positions is warranted. I recommend initiating a short position at $0.696, placing a stop-loss order at $0.678, just above the bottom of the Bollinger Bands, and setting a target price of $0.603, aligning with the forecast low. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential bounce, but in a downtrend, it can also indicate a temporary pause before further decline. The RSI reading of 38.1 suggests a slight oversold condition, but not a strong reversal signal. Therefore, a short position at $0.696 with a stop loss at $0.678 and a target of $0.603 offers a favorable risk-reward ratio given the prevailing bearish sentiment and forecast. This strategy aims to capitalize on the continued downward momentum while mitigating potential losses with a carefully placed stop loss. Based on the historical data and forecast, Wrapped Beacon ETH has shown significant volatility, with a recent downtrend indicated by the forecast prices. The RSI values fluctuate, but the recent dip below 35 suggests an oversold condition. Considering the support price of $4,190 and the downward forecast, a contrarian strategy focusing on potential rebounds is advisable. I recommend a long position entry at $4,280, placing a stop-loss order at $4,190 to mitigate potential losses. The initial target price is set at $4,430, aligning with the recent resistance level. To refine this strategy, we will incorporate the Bollinger Bands. The current price is near the lower band, suggesting a potential bounce. If the price breaks below the lower Bollinger Band of $3,980, the long position should be exited immediately. Conversely, if the price reaches the upper Bollinger Band of $5,150, we will consider taking partial profits at $4,480 and move the stop loss to break even. This dynamic approach, combining RSI oversold signals with Bollinger Band confirmations, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Chainlink has shown a significant downtrend, particularly evident in the recent price action dropping from $23.4 to $17.5, and the forecast predicts further decline to $16.3. The RSI consistently indicates oversold conditions, fluctuating below 40, suggesting potential for a short-term bounce. However, the overall trend remains bearish, supported by the declining Bollinger Bands and the downward forecast. Therefore, I recommend a contrarian strategy combining RSI, Bollinger Bands, and support/resistance levels. My strategy involves a long position at $16.3, capitalizing on the oversold RSI and potential bounce. The stop loss will be placed at $16 to limit potential losses if the downtrend continues. The initial target price is $18.9, aligning with the recent resistance level and a conservative profit objective. If the price breaks above $18.9, we will adjust the target price to $20.2, the next significant resistance level. This approach seeks to capture a short-term rebound while mitigating risk with a tight stop-loss, capitalizing on the temporary oversold condition within a broader bearish market. Based on the historical data and forecast, Render shows a declining trend. The price has been fluctuating within a range between $2.37 and $3.33, but the recent forecast indicates a continued downward movement, potentially reaching $2.19. The RSI has been consistently below 50, with several days showing oversold conditions, below 30, suggesting potential for a short-term bounce, but the overall momentum remains bearish. Considering the Bollinger Bands, the price is currently near the lower band, indicating a potential for a rebound. However, the forecast suggests the price will continue to fall below the lower Bollinger Band. Therefore, a short selling strategy is recommended. The strategy involves entering a short position at $2.81. The stop loss should be set slightly above the upper Bollinger Band at $4.08 to protect against a potential short-term rebound. The initial target price is set at $2.3, aligning with the forecast and support level. If the price reaches $2.3, consider moving the stop loss to the entry price of $2.81 to secure profits and potentially ride the trend further. A secondary target price can be set at $2.19, based on the forecast, for a more aggressive profit-taking approach. This portfolio combines RSI, Bollinger Bands, and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Curve DAO has shown significant volatility, with a sharp decline followed by a partial recovery. The RSI indicates oversold conditions recently, but the forecast suggests continued downward pressure. The Bollinger Bands have been widening, indicating increased volatility, and the price is currently near the lower band. Considering these factors, I recommend a short-term contrarian strategy targeting a potential bounce after the price tests the support level. My strategy involves entering a long position at $0.456, placing a stop loss at $0.452 to limit potential losses, and setting a target price of $0.527. This strategy aims to capitalize on a potential short-term rebound from the support level, while the RSI is still in oversold territory. If the price fails to reach the target and instead breaks below the support, I will close the position to cut losses. This approach combines technical indicators and price action to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Theta network shows a declining trend. The recent sharp drop to $0.478 on October 12, 2025, combined with the forecast indicating further decline to $0.432, suggests a strong bearish momentum. The RSI consistently below 50, particularly the low of 24.4 on October 12, confirms an oversold condition, but the subsequent forecast shows a continued downtrend. The Bollinger Bands are contracting, indicating decreasing volatility, and the price is trading below the moving average, further reinforcing the bearish outlook. Therefore, I recommend a short selling strategy. The entry price for this short position should be $0.583 on October 13, 2025. Given the bearish forecast and the support level at $0.478, the stop loss should be set at $0.643, slightly above the bottom of the Bollinger Bands to avoid premature exits. The initial target price should be $0.512, aligning with the forecast for October 14, 2025. If the price continues to decline, the second target price can be $0.462 on October 16, 2025, and a final target price of $0.437 on October 17, 2025, based on the forecast. This strategy aims to capitalize on the anticipated downward trend while managing risk with well-defined stop-loss and target levels. Based on the historical data and forecast, Immutable shows a declining trend, particularly evident in the recent forecast prices dropping from $0.607 to $0.487. The RSI consistently indicates oversold conditions with values below 40 for several days, reaching a low of 31.9, suggesting potential for a short-term bounce. However, the forecast data strongly suggests a continuation of the downward trend. Therefore, I recommend a contrarian strategy with a short position, capitalizing on potential short-term rebounds while preparing for further declines. We will enter a short position at $0.503, placing a stop loss at $0.535, just above the lower Bollinger Band to avoid being trapped in a false breakout. The initial target price will be $0.487, aligning with the forecast price for October 19, 2025. To enhance the strategy, we'll incorporate Bollinger Bands for confirmation. When the price touches the upper band, indicating potential overbought conditions, we'll consider covering our short position partially to secure profits. The portfolio will be 60% short position, 20% RSI strategy, and 20% Bollinger Band strategy. The RSI strategy will be used to identify potential short-term bounces, while the Bollinger Band strategy will help manage risk and secure profits. We will adjust the position based on the RSI and Bollinger Band signals. The final target price will be $0.492. This combined approach balances the declining trend with short-term volatility, aiming for high returns while mitigating potential losses. Based on the historical data and forecast, Pudgy Penguins exhibits a downtrend in the recent period, particularly evident in the declining forecast prices from $0.0262 to $0.021. The RSI consistently hovers below 50, indicating a prevailing bearish sentiment. The Bollinger Bands also suggest a contraction, which often precedes a significant price movement. Considering these factors, I recommend a short position strategy. The entry price should be set at $0.0262, coinciding with the initial forecast price and a potential resistance level. To mitigate risk, a stop loss should be placed just above the upper Bollinger Band at $0.0349. The target price should be set at the support level of $0.0217, providing a substantial profit margin while accounting for the established support. To enhance the strategy, we'll incorporate RSI signals. If the RSI dips below 30, oversold, consider a partial exit at $0.0256. Conversely, if the RSI reaches 80, overbought, tighten the stop loss to the center of the Bollinger Bands. This adaptive approach combines trend analysis, volatility indicators, and RSI signals to optimize risk-reward ratios. The final portfolio will be 60% short position, 20% RSI oversold exit, and 20% RSI overbought stop loss adjustment, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Eigenlayer demonstrates a declining trend. The price has been fluctuating within a range, but the recent forecast indicates a continued downward movement. The RSI consistently falls below 80, suggesting a lack of overbought conditions, but the recent dip to 35.5 and 34.3 indicates potential oversold opportunities. Considering the Bollinger Bands, the price has been approaching the lower band, suggesting potential support. Therefore, I propose a contrarian strategy focusing on short-term reversals. I recommend a buy position on October 13, 2025, at $1.49. The stop loss should be set at $1.36, just below the recent support level, to limit potential losses. The initial target price is $1.7, aligning with the center of the Bollinger Bands and a potential rebound. If the price reaches $1.7, consider moving the stop loss to the entry price of $1.49 to protect profits and potentially extend the target price to $1.9. This strategy combines RSI oversold signals with Bollinger Band support to capitalize on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, Bittensor shows a volatile trend with periods of both upward and downward movement. The RSI consistently fluctuates, indicating indecision. The recent close price of $381 on October 12, combined with an RSI of 62.3, suggests a potential overbought condition. Considering the forecast for October 13 to 19, which starts at $338 and gradually increases, I propose a strategy focused on short-term gains with a focus on the overbought condition. We will initiate a short position at $381, placing a stop loss at $385 to protect against a sudden reversal. The target price will be $361, aligning with the support level, aiming for a quick profit as the price corrects. To refine this strategy, we'll incorporate the Bollinger Bands. The price has recently touched the upper band, reinforcing the overbought signal. If the price breaks above the upper Bollinger Band, we will tighten the stop loss to $383. Conversely, if the price approaches the lower Bollinger Band during the forecast period, indicating a potential oversold condition, we'll consider a long position at $338 with a stop loss at $335 and a target price of $344. This dynamic approach, combining RSI and Bollinger Bands, allows for adaptability and maximizes potential returns in this volatile market. Based on the historical data and forecast, PancakeSwap has shown volatility with an overall upward trend. The RSI indicates periods of both overbought and oversold conditions, while the Bollinger Bands suggest potential price fluctuations around the center line. Considering the support price of $3.07 and the recent price action, I recommend a long position strategy. We will enter a long position at $2.86, placing a stop-loss order at $2.76 to mitigate potential losses. The initial target price will be $3.3, aiming to capitalize on the anticipated upward movement indicated by the forecast. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI falls below 20, indicating an oversold condition, we will consider entering a long position at the prevailing price, with a stop loss at the bottom of the Bollinger Bands and a target price at the center of the bands. Conversely, if the RSI exceeds 80, suggesting an overbought scenario, we will consider a short position with a stop loss above the top of the Bollinger Bands and a target price at the center line. Combining these signals with the support and resistance levels will create a robust and adaptable portfolio for maximizing returns on PancakeSwap. Based on the historical data and forecast, Dash exhibits a strong upward trend. The price has consistently moved above the Bollinger Bands, indicating robust bullish momentum. The RSI consistently remains above 70, nearing the overbought zone, suggesting a potential pullback but not an immediate reversal. Considering the forecast prices, which predict a continuous increase, I recommend a long position strategy. We will enter a long position at $43.4, leveraging the predicted upward movement. The stop loss will be set at $41.4 to mitigate potential losses if the price briefly retraces. The initial target price will be $48.5, aiming to capitalize on the short-term upward projection. To refine this strategy, we'll incorporate a dynamic target price based on the Bollinger Bands and RSI. If the price reaches $48.5 and the RSI is below 80, we will move the target price to $50.5. If the price reaches $50.5 and the RSI is below 80, we will move the target price to $52.3. This allows us to capture more gains while managing risk. If the price falls below $41.4, we will exit the position to avoid further losses. This combination of technical indicators and forecast data provides a high probability, high return investment strategy for Dash. Based on the historical data and forecast, Synthetix demonstrates a recent upward trend, supported by consistently testing the support price of $1.01 and the forecast predicting further price increases. The RSI fluctuates between 47.1 and 75.1, indicating periods of both oversold and overbought conditions. Currently, the RSI is at 69.4, nearing overbought territory. The Bollinger Bands show the price oscillating within a widening range, suggesting increased volatility. The forecast prices consistently remain above the upper Bollinger Band, which signals a potential bullish momentum. Therefore, I recommend a long position strategy, capitalizing on the anticipated upward movement. To implement this strategy, enter a long position at $1.31, coinciding with the initial forecast price and the upper Bollinger Band. Set a stop-loss order at $1.23, just below the recent price action and below the lower Bollinger Band, to limit potential losses. The target price should be $1.58, aligning with the final forecast price and providing a reasonable profit margin. This strategy aims to capture the anticipated bullish trend while managing risk through strategic stop-loss placement. This is a high-risk, high-reward strategy suitable for experienced traders.